stocks on the editor's radar. And I guess there's no brownie points for guessing that we're going to be discussing real estate stocks, Nikunj. What a phenomenal move we saw yesterday. Do you think it was the DLF effect, or are there other factors that are attributing to this stellar move in real estate stocks yesterday?
I think DLF surprised everybody, but that's like 3 months ago when they said, look, we managed to sell a large property of about 8,000 crore in less than 3 days. So that in a sense really was a realization factor for the capital market that the real estate demand is back and the real estate demand is here to stay. And because of RERA and other factors, what's happening essentially, you are going to be seeing a uptrend by good branded by good developers as they are going and marketing new projects. Also, please remember that last 12-18 months have been a period of high inflation prices, shortage of labor. All that adjustment also has started normalizing. And third and the foremost factor I feel, Avan, is that there is a change when interest rates they come down. You want to go back to real estate. Why? Because affordability factors which were coming under question because interest rates and home loan rates are going higher. I think that also is stabilizing. So there is a bit of a macro. There is a bit of a catch-up because after years of underperformance, real estate is making a comeback. And then there is this entire space where you've got a macro tech, DLF. Those builders in a sense are now able to gain more market share because in India, real estate demand is real. Real estate demand is here to stay. It may go through patches of cyclicality, but the linear trend is that it will always be higher in a 3 to 5 year time frame. And these are under-owned sectors where institutional investors don't have any ownership. So a lot of factors have come to there. Nothing specific yesterday, but in terms of an outperforming sector, I think this sector has still a long way to go.
Yeah, and demand, as you said, is here to stay. Let's move on then. And this is a stock that we don't flag off too often on the channel, Sundaram Finance. In fact, the company is a South-based NBFC. They've incidentally not even raised capital in the last 40 years, but are going to be a huge beneficiary of the CV upcycle.
We don't realize it. They've not raised capital in the last 40 years. So imagine an NBFC which has managed to grow without raising capital, which means that they are just taking care of the equity shareholder. Best of the banks, best of the NBFCs, they really raise a lot of capital. Look, this is one of those, in South they say that don't buy gold but buy a stock of Sundaram Finance. They've gone through a change of guard and they've gone through a migration. In terms of quality, lending, risk understanding, everything is supreme for Sundaram Finance. I'm genuinely using these superlatives because I mean it, looking at the performance. Why have we got Sundaram Finance back on our radar? CV. And I also feel that typically when interest rates they peak out, NBFCs they start outperforming. We've seen traces of that last week in Bajaj Finance, Aditya Birla Financials. So the credit cost I think is good. NBFCs are looking strong. CV cycle is in a good space. The new management, it's old, about a year plus. I think things are changing there. This is a stock which I think will pop up. It's a stock which we don't talk about it too much because it's not a retail dominated stock. 2400 rupee ka stock retail nahi dekhta hai. But I think keep eye on this one.
Okay.